You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. We get on here every single day, 11 o'clock Eastern. We go over the market, and every single day we give you an idea of our favorite market view. I got to work on that a little bit, but the big announcement today, you can tell we're live. So every day we're on here live. So if I mess up like that, we're still live. It is what it is. But the exciting news is right here, because tomorrow we have our Masters in Trading Summit. The Masters in Trading Summit, we've been working on this through 2024. mastersintrading.com/summit. The summit will be 10 o'clock Eastern time live on Wednesday, on tomorrow. Because we're doing the summit live, I can't do Masters in Trading live as well. So tomorrow we will not have Masters in Trading, but we're going to have the big Masters in Trading Summit, 10 a.m. Eastern again, mastersintrading.com/summit. I'm excited to see you there. Let's go over four things. Cues. We saw, perhaps, I'm going to quote myself, the weakest rally and the weakest fall sell-off in the history of sell-offs with the cues. That's why we bought some upside calls. Those are moving in our favor. I have a divergence trade that I want to talk about. A divergence is just two products move together, separate, and come back. A divergence would be Coke versus Pepsi, Ford versus GM, gold versus silver. Next, have a plan. Plan ahead. There's no feel when it comes to trading. And then finally, we have a trade of the day. Let's move on to the charts and let's go over the trades. The first thing I want to do is go over these 440 calls. Our 440 calls were shared when the market couldn't fall whatsoever. And you can go back and listen to our MIT Lives, and it was here where we called this the lamest break of all breaks. And when the market can't fall around a key level, our key level was 433. If the market can't fall, it's going higher. It's kind of weird, but when the market takes away a big number like this, it has a responsibility to break. And if it can't fall, it's going higher. I've always kind of felt like that. When we go through a big number, we better fall. And if we don't, we are going higher. So what did we do? We shared the 440 calls. We shared them when there was 8 days to go until expiration. Yesterday, I shared how some in the community were handling this trade. Let's take off this trade. The 440s, many of you got in there for under $1. Right now, these are 260 bid. So right now, 440s, let's lock in. Sell to close at 260. The original trade, I believe, if you want to go back and check the original trade, would be April 24th. But we are working out of our QQQ trade, our short-term trade. Hey, big fist bump for everybody who was able to take advantage of this trade and make a whole bunch of money. Great, great job. Divergence. Guys, I grew up on the East Coast in New Jersey. Went to school, University of Miami. The U. Moved out to Chicago to trade in 1997. Since 1997, the only thing I've done throughout my professional career is trade. In every single stop along my career, every single time, there's been a divergence trade. So I first started trading S&P futures, okay? So S&P. And instead of trading S&P bullish or bearish, just guessing on which direction, I traded the S&P relative to the NASDAQ. And for me, this is a much better trade. Instead of looking at the direction of one asset, looking at the relationship. And so in front of you, this is the oldest tradable relationship. It's gold versus silver. Gold is going to be our light blue, and silver is going to be our yellow. Taking you back to 2020, just so you can see they move together. There are times where gold trades expensive relative to silver. There are times when silver trades expensive relative to gold. But I think it's fair to say that these two are holding hands and skipping through the woods together. They're not really going too far from one another. One of the best trades that we have, if not the best trade that we had in Masters in Trading, like folklore, going back to 2015, I founded Masters in Trading with a small group, mostly for private coaching, going back to 2015. After COVID, look what happened. Gold traded higher, but for whatever reason, silver decided to trade lower. This trade right here, playing for silver to come back and catch up to gold, was one of those trades where you just get exponential returns because look at the difference between the two. Those are the trades that we're looking for. Once they pop up, those are the trades. Right now, gold is expensive relative to silver. Is it a knock your socks off type of trade like this? Not really, but maybe we can find something along the same lines. This is gold versus silver. This is gold versus silver too. How can this be gold versus silver if that is gold versus silver? Well, instead of looking at things with two lines, gold minus silver is exactly the same as looking at things gold, silver. Same trade, right? 2020, gold gets very expensive relative to silver. Sells all the way off. A trader could capitalize on this by buying gold and selling silver. Well, right now, it looks like gold expensive to silver, just like it was back in 2020. Really interesting. That's why we want to look at things along a divergence as it relates to one another. Right now, gold expensive relative to silver. These are the two different charts. This is just one minus the other, and this is one by one on top of the other, okay? And you can see the same time periods, right? It's the same way of just looking at the same kind of chart. Very cool. If I was going to expand on this a little bit further, what if I bring in another metal? Platinum. Same thing, you could still see silver weak relative to gold, but platinum, extreme weakness relative to the other metals. That's why last week we shared a trade to get long platinum. We shared a trade in PLTM, not in platinum futures, but a way to get long platinum, you could use ticker PLTM. And this just looks at them on a little bit different time frames just to really show you how inexpensive platinum is right now relative to silver and gold. Plus, you go to the grocery store, every single thing is up, 30%, 50%? So platinum is down. Platinum is very, very inexpensive relative to the other metals, and it's just inexpensive relative to what inflation has been doing along the same time frame. Let's get a little bit more creative. How I always finish these lives is I like to say the creative trader wins. And when I say the creative trader wins, guys, it means that I want to look at things differently than others do. I want to look at the market differently than how you look at the market. Because that's, in my mind, how I could find edge. So instead of just looking at silver or copper, what if we look at silver minus copper? That's going to be the pink. Gold minus copper is going to be the blue. Gold minus silver is going to be the green. How can we take advantage of this? Let's look at this period. Okay? If we wanted to express an opinion during this period, okay, you would silver, you would sell. Copper, you would buy. And by the way, when I say sell silver, you could sell silver futures, you could sell silver stock, you could sell a silver miner. When I say buy copper, you could buy copper futures. You could buy a copper company, FCX. We're long copper through BHP. The Brazilian stocks are all closely correlated with copper. This is what I mean by the creative trader wins. It's a different style of trade that many of you were exposed to. If we want to sell silver and buy copper, that's going to be this. If we want to buy gold and sell silver, we would buy gold and sell silver. That's an interesting trade, right? What does that look like? I'm going to move down here. Actually, I'll move right here. That trade, getting a slightly bit more sophisticated, that's silver against gold and against copper. So if I wanted to, what's going on right here? Silver is extremely expensive relative to copper and relative to gold. And here you got a major silver sell-off. Those are the kind of trades that we're looking for. Not here, almost here, and wait for those correlations to separate. It's a very cool trade. This is always a topic in our community, so I want to go over it right now. Have a plan, stick to a plan. We often like to buy options with a fixed amount of risk. So we may buy an option for $1, and that option may have 100 days until expiry. The plan is if we want to buy an option for $1, we're holding it for 100 days. But we don't want to just be robotic and buy one and hold it for 100 days. Instead, have a plan. How much do you want to risk? Let's say you're willing to risk $1,000. Well, how would you enter this trade in order to risk $1,000? And that's the plan that we're going to talk about. And one of my long-term members, Bradley, put together a trading plan. And the trading plan is exactly how we approach the market. So if you can't see it, he starts off with his risk. His risk is $300. Okay? He doesn't want to lose more. So if you risk $300 buying options, you can never lose more. His plan, he wants to buy the 10 calls, the 9 calls, and the 8 calls. Okay? His positions, the cost that he's willing to pay. So he's getting in front of all of these possible scenarios before they even happen. So risk $300, he comes in and says, hey, I might want to risk if the stock trades 844. If it goes against me, I'm going to buy some more. If it goes against me, I'm going to buy some more. So you're buying here, that's your first tranche, your second trade, and your third trade. You're fading the market, it's called, as it goes against you. Now again, guys, this might be over your head. This might be a little different than you're used to, but I'm on here live every single day, drilling these lessons into you. This is how we trade. This is how we manage money. The great thing about this approach, Bradley can never lose 1 cent more than $300. And if I go back and look at the exact trade that he did, it was back here in 844. It's getting into a trade here. If it goes against you, we're staying in the trade at 760, and his last level didn't get filled. If you don't get filled, no harm, no foul. Then he builds into a position when it's finally able to go up. He already has his pre-planned exits, knowing what he's going to do if or when the stock trades up to a certain level. So what we want to do is make your decision before you get into the market. What are you comfortable risking? Bradley was comfortable risking 300. You can never lose more. If you're comfortable risking 3,000, fine. Have a plan, go through those 100 days and never lose more. And hopefully we put ourselves in position and make a whole bunch of money. Now the trade of the day, we've been sharing trades every single day, and I don't want to overwhelm you guys. So we are going to add or going right back to our platinum. Platinum is very, very inexpensive relative to silver, relative to gold. Platinum, PLTM, is trading at 950 right now. We are very, very bullish platinum. Traders could consider getting long platinum futures. Traders could consider getting long PLTM. There's many other ways to get long platinum as well. But I have something very, very important to leave you with. Tomorrow, 10 o'clock Eastern, we are doing the Masters in Trading Summit. Join us. It's join us again. Remember I told you it's live. I can't fix my mistakes. Like that one. mastersthanTrading.com/summit. We'll see you guys live tomorrow, 10 o'clock Eastern. Final reminder, we will not be having our Masters in Trading live tomorrow because we will be at the summit. We'll see you guys there tomorrow.
Join us every weekday at live.mastersintrading.com.